Well, Greenlam Industries is the next management on our radar. Remember, they reported a rather good set of numbers. To understand what's the way ahead, post that margin expansion that we have seen, well, we're joined by Mr. Saurabh, who joins us on the show. Hi, sir. Good morning. Thanks so much for joining in, and always good speaking to you. Well, earlier on when you joined in, you had told us that, you were looking at FY24 revenue guidance of around 20 to 25%. In the first half of the year, you've done close to around 13%. So give us an analysis now. At the halfway mark, how does the year shape up? Do you get to the 20-25%? What do margins look like? And have exports come back?
Sure. So I think we'll be more like the 20s plus minus few percent and not in the 25s. And so I think second half in terms of revenue should be better than H1 by that logic. And I think margins also we should be able to maintain margins in the similar band we've done in H1 or rather slightly get better than that. Yeah, so I think that's on the margin front. And what was your last question?
Exports? Exports, have they come back?
Exports, we've grown in exports in H1. By and large, the data we have is that exports from India has actually dipped a bit, but I think we've ended up taking more market share. So I think exports will continue to do okay, I think. Yeah? But generally, obviously, in the market, in the global market, there are challenges. But with the infrastructure and product range expansion, we think we should be able to do good in exports too.
I remember the export realizations being a bit of a drag earlier. So now, has that moved towards normalization? What's the difference in realization between domestic and exports? So
exports realization has been normal. We had a little bit of a challenge in Q1 where we couldn't, ship all the goods because of the challenges at the Mundra Port. And exports realization will be, about 15% approximately higher than the domestic realization. That's largely because of the size of the product we ship. Because exports, you have larger size laminates, but domestic laminates is still largely 4 feet by 8 feet. So that's the reason. But exports realizations are quite normal for us, and it's kind of running fine.
So that explains the margins that the margin expansion that we've seen in the laminates business itself, and that sustains, right? The second quarter margin sustain for the year, or the first half margin sustain?
So in laminates, we think we should be able to maintain the Q2 margins, and our Gujarat plant is also up and running at near 100% utilization. We started our fourth laminate plant at Andhra Pradesh, which commenced commercial production on 29th of September. I think that will go through a slight stabilization phase. But by and large, we think we can sustain the margins of laminates.
Okay, all right. Are you gaining market share in the domestic market?
We don't have data of the competition numbers, so can't say very clearly. But our guess is with the product range expansion and the feedback we have from on ground, I think we probably are gaining market share in the domestic market too, probably from the unorganized companies or the mid-sized companies. That's a guess, but we don't have data of what the competition has done in Q2. When the numbers do come out, I think it'll be more clearer. But the feedback we have is that we're getting market share, in the domestic market too.
So you've increased your Gujarat plant capacity utilization. The Andhra Pradesh plant has started towards the end of the previous quarter. Then you have another plant which is likely to come in the fourth quarter. That's the particle board plant. And Tamil Nadu's already, commenced production. So from a full utilization standpoint, when does that happen? In FY25, what does your revenue growth look like?
So full utilization will be more like an FY26 for particle board, for laminates, Andhra Pradesh, for plywood. For particle board, it may be more like a FY27. And next year, I think, too, depends on how we close the H2. We should be able to grow like 20-25% next year, too.
Okay. All right. What about debt? Could you tell us what is the peak debt likely to look like? Do you have any fundraising plans? Will the company look at a potential QIP or raise some money from the market?
So we have no fundraising plans on the debt with the projects ongoing. I guess is peak debt should be in the range of 850 crores. And so I think that's where we think the peak debt should be. Net peak debt, which should be towards the end of this financial year.
All right. And final question before we let you go. Just 2 data points. One, by when does the Deco Veneer business turn operating profit? And secondly, what is the working capital range that you're working with? Came down to 60 days in the second quarter.
Right. So working capital, we've improved by about, I think, 10-12 days over the previous year, Q2, despite the fact that we had 2 new plants starting up One was the plywood factory at Tamil Nadu and the Andhra Pradesh laminate factory. So if you see like-to-like business, I think the improvement has been even better, but that's where we are. So we think as we move ahead with the discipline we have on cash flow management, we should be gradually able to keep improving number of days. Maybe one quarter it could slip here or there, but by and large, we think that should be absolutely under control. As far as the decorative veneer and allied category is concerned, in Q2 we grew about, I think, 20-25% versus Q2 of FY23, and we also grew versus Q1 of this financial year. Operating margins or losses have been very, very marginal. I think it's about some 80-90 lakhs. So I think we're very close to turning that profitable, and our efforts are absolutely on to build that part of the business. And we think we'll keep improving that part of the business too.
All right, Saurabh, thank you for joining in. Always a pleasure speaking with you. Wish you good luck for the second half of this year and FY25 as you increase the utilization of your new plants. Take a short break, come back, get you more on the markets and individual stocks. Stay tuned.